Absolutely yes, welcome back to my channel. Do you want to generate results like these yourself? Look at this, 150 pips, 100 pips, 280 pips, 300 pips, on and on and on, 140 pips on every single day, multiple times a day. In this video I will show you, share you and demonstrate you and teach you one of the best and easiest and quickest gold scalping strategies. So this is just to clear out the noise. If you learned many strategies before and you're still looking for that special strategy, even there is no special strategy, if you're looking for that 100% winning trading strategy, doesn't exist. If you use this strategy, then I will show you and teach you right now, sky is the limit. And actually you can pinpoint the date when you learn this strategy and then just use it for next 1 month. And see the results for yourself. Let's jump in, okay? Let's stop wasting time. Let's clear the noise. Let's clear our mind and understand that there is no such thing as the best trading strategy. But if you use this every single day from Monday to Friday, you should see the results as long as you follow these rules. And these rules are as follows. Let's get it started, guys, because I'm really excited because this strategy is phenomenal, okay? It works every single time. Well, first let me explain why this strategy is built for gold and why it works on the best on 1 minute time frame. So first of all, gold is one of the most volatile instruments in the market during the London and New York sessions. It produces fast, clean moves, perfect for scalping. The 1 minute chart itself allows you to enter and exit quickly, but only if you're disciplined. If you hesitate, overthink or chase trades, gold will punish you. That's why most people trade. And that's why session timing and rules is one of the most important points. Session timing and rules. I'm talking about the London session and New York session only. Write it down, okay? Now, if you hesitate, overthink or chase trades, gold or any market will punish you, and that's why most people lose money, okay? So make sure that you understand that the session timing and rules is everything here. So so what do I mean sessions? So there are 4 sessions every single day from Monday to Friday. If you don't know this and you're losing money, then, I'm sorry. So there's Sydney session, Tokyo session, they call it Asian sessions, and London session and New York session, okay? This is the main trading session. Again, nobody is they're talking about this on any other channels. It's very interesting because this is my most important thing. The most lucrative time to trade gold itself or even forex major pairs is this one, between 8 o'clock and 1 o'clock. So respectively, we're looking at London Open and New York Open, okay? So those are the most lucrative times to trade gold because it's the most volatile time to trade gold. In order to make profits, we need volatility. There's no volatility, there will be very limited profits made, and you'll be basically glued to the screen. You don't need to be glued to the screen. In my case, if you're a newbie trader, I'm not a financial advisor, but when I started off, the most lucrative sessions was after the New York market open, so between 12 o'clock and 2 o'clock. Between 12 o'clock and 2 o'clock, GMT time. But again, a most lucrative time to trade will be when the London market opens and the New York market opens. Right, so rule number one, I only trade this strategy during London and New York sessions. If it's outside those sessions, I do not trade, no exceptions. So before the session starts, I mark the key highs and key lows from the previous session and any clear reaction levels. I also avoid, for example, to trade during the high impact news. So if there is 3-star, 3-ball news events, you do not trade during those times. So gold becomes unpredictable during news. And scalping during that, scalping or trading during the high impact news is basically a gambling. So what I'm talking about here is this. So look, this is our London session, right? Right. This blue box, you see it says London. And this red box this red part that just started is a New York session. So before the New York session opens, in this example, we place key high levels and key low levels for the previous session. So New York session open. What do is, before that, we mark the key highs and key lows on the previous session, which in this case is the London session. Now, let's break it down 5 minute to 1 minute time frame, and let's talk about the entries, okay? So I wait for the price to reach, the clear level, previous high, low, or strong reaction level. I do not enter randomly in the middle of the price. So on a 1 minute chart, confirmation is the key. I want to see clear rejection or momentum from that level before entering. If price hesitates or chops around, I skip the trade. If this condition isn't met, I don't enter the trade, no exceptions. So the key high levels, okay, or low levels on a previous session is phenomenal. Those are our ceilings. So for example, take a look at this, okay. So now we have marked the high level, okay, on previous session and low level of the London session. And now here we can see the New York session launching. Look at this, okay. Look how beautifully price is being respected. So look at this. So let's take a look at those candles. So a New York session opened and boom, see? The candles went down and touched the London low. And the second candle was green. So, bullish engulfing candle. When you see this bullish engulfing candle, that's, that basically means that yes, the price is respecting this previous session low as our support. And we could make buy trades. And so let's just see how it works out. So again, we could enter buy trade twice, once and twice, because we saw the price touching this level. Boom! Next was bullish engulfing candle, and same here. Red candle was touching the line, and next candle is the bullish engulfing candle. And make sure, guys, you understand that bullish engulfing candle must close higher than the previous bearish candle. Same as here, okay? That bullish engulfing candle triggers that the price is looking to go higher from that point forward for a small time, okay? Small time scope, of course, because we're looking at the 1 minute time frame. And let's take a look at this. So now let's take a look at what's gonna happen on the next, okay? Here next, price touched this level. What we would do if we saw bearish engulfing candle, red, bigger candle closing below the green candle, we would place sell trade and we would make money every single time by doing that. Again, same as for bullish engulfing. But did that happen? Did we saw that confirmation? No. What did we see? We actually saw a new candle developed above our previous session high. That triggers that, price looking to go more higher up. So, in order to place buy trade, should we place buy trade immediately when the price smashes through our resistance, aka previous session high key level? No. What we would do is, we would wait for some sort of rejection going back here, like a red candle, and then we would wait for the bullish engulfing candle showing us confirmation that price is gonna go up. Let's see. Price went up, okay, nice. Price went up, okay, again we wait. Here we saw the price smashing through our zone. Was there a buy or sell trade? Tell me. No, right? There was no buy or no sell trade. For buy trade, we will need to look for a bullish green engulfing candle. But what instead happened was red candles, okay, just was smashing through that level, so we just do nothing, we wait. That's the beauty about this scalping strategy. You don't need to be glued at the computer, but once you see these levels, and once you see bullish engulfing or bearish engulfing candle, those are triggers. So now what do we see? Yes, look. I haven't seen this chart, and I'm fascinated about this because I always like the challenge. So look at this. So what is this? What's happened here? You might say, Andrew, yes, so based on your strategy, the price did went up right here. We saw a red candle, means that we should probably sell here. But the price didn't drop. Oh la la, what should we do? Oh no, we don't understand the strategy. No, bearish engulfing candle for sales should be always bigger and should close below the previous bullish candle. See, this bearish candle is red. It's smaller than the previous green candle. For sales, we would need, guys, I really want to come back on YouTube full time. For sales, if we saw this candle, red one, right? This candle, this red candle should be bigger than this previous candle, green candle. We should see candle close just, below here, below this body, close, red. Then it would be, yes, then we should be looking for sales. What, did that happen? No, it was simply, it was not a doji, but price was, this was a red candle, but the price, as you can see, there was a lot of pressure, price was pushed up, and this candle was not bigger than this candle. It means there's no sales whatsoever. And then the next candle, that's why newbie traders, lose money. They don't know what they're looking at. And it's so simple, and once you understand this concept, you can change your mindset forever. Stay with me, guys, stay with me, guys. So next candle was here, was red, okay, and okay, yes, and now the price was smashed up. So let me just go right here. Of course, this candle right here triggered that there is a bullish pressure going up. Okay, this is a bullish engulfing candle. Closed above the previous candle, and the price, was going up like look at this. Go now. Again, you can see the price reversed and touched the same key level. Key level is so important because it's previous session high. So now let's talk about stop losses and the take profits. Most important. Remember, guys, because this is scalping, risk management is tight. My stop loss is small and placed logically, just beyond the level that invalidates the trade, basically. My take profit is also realistic. I'm not aiming for massive moves, on a 1 minute chart. So, on gold, hesitation is expensive. You either execute the plan or you don't trade. Now, for risk-thirsty people who wants to make most money from this strategy, of course, you could, whenever you place buy trade on these key levels, of course, you should definitely take your profit if the price has reached the previous session high key level. Now, but the thing is this, that will not always happen. But remember, we are looking at 1 minute chart, and this could happen in matter of couple of minutes, okay, matter of several minutes. So that's thing number one. Thing number two, use, if you're a risk reverse person, use 2-to-1 risk reward ratio. Meaning that, if you, for example, if you place the buy trade here or here, then make sure that, measure your range. In this case, the range is massive. It's 218 pips, okay? So be realistic, guys. 218 pips. Ask the question, what leverage you use with your broker? If you use leverage such as 1 to 200, then, you should cut this to half, okay? Take your profit, or, take your profit here. And, and use 2-to-1 risk watcher. So if you take your profit here in the middle of this range, so this is for the risk reverse people. Take your profit at the middle of the range. Okay, and then, so this, in the middle of the range is here, so that's what, the 218 is what? 100, so 90, so let's say 109 pips. 2-to-1 would mean that 2-to-1 risk one ratio. So this is your stop, so half of this is your stop loss. So 100 pip profit, 50 pip stop loss, which is right here. 50 pip stop loss right here. But remember, guys, make sure that you enter your take profit and stop loss levels based on your risk reward ratio and also depending on your leverage. But make sure you do this when you enter the trade. Don't simply open a trade at the market execution and then just go away for a couple of hours. This way, you will blow your account up. Now, if you're a newbie trader and you are completely risk averse, you can also use ATR, average through range indicator. I know when I started this video, I said that we will not use any indicators, but guys, ATR is completely free indicator on all charting solutions. So go to indicators, search for ATR, average through range, and this indicator will appear on the bottom of your screens. And basically what we're going to do is we're going to use these values that appears on the right hand side when you place the trade. So when you place the trade, make a note of that value. For example, now it's 8.17. If my risk reward ratio is 2-to-1, then my stop loss will be 8 multiplied by 2, 16. So my stop loss for my buy trades will be Current price minus 16. But it's just one example. So here is quick example, okay? So how to calculate it. So for long positions, entry price minus ATR value by the multiplier. Or for sell trades, entry price plus the ATR value multiplied by the multiplier. So this strategy stops working the moment you break the rules. The biggest mistakes traders make are overtrading, entering late, trading outside sessions, and revenge trading after the loss. So don't do that. If you can't control yourself, no strategy will save you. So this 1 minute trading strategy, works best for traders who can follow the rules and stay disciplined. Well, trading isn't about, doing more. It's about doing less, but doing it better. If you want more gold trading content like this, subscribe to my channel, and most importantly, click on the first link below the video and join my free Telegram channel where we use several tools as well as automated trading tools. This is just phenomenal what we're doing lately. So join my free Telegram and see action all in front of your eyes. I hope you enjoyed this video. If you have any questions, you're always welcome to contact me. My contact details are on my Telegram, and I answer my queries every single day because I want to help you as much as I can. I love you all, and see you on the next one. Bye bye.